What's wrong with my camera? All right, 1-to-1 is done. That's good. Okay, I guess my camera is fixed now. Okay, just a little bit of adjustment. There we go. Okay, 1-to-1 is taken. Stop to break even. For the second one, let's see. Let's push this a bit down. For the second one, yep, I don't want to struggle and fight these bearish candles. So 1-to-1.5 seems a bit fair to me, considering we don't have much of information in the order flow. So the first one was how much? 125 ticks. That's good. Stop was at the highs. My hair is a mess. All right. I'm looking at order flow. Let's look at order flow. Let's switch. Or is it gonna go to my profit? Do I have time to switch to order flow and explain it, or you want to go there? It seems it's want to go there. It seems it's gonna go there. All right. Okay, the second trade is closed with 1-to-1.5 RR, or risk to reward. Now let's go and explain this trade, because this is a model or a playbook available for everybody. This trade was based on another playbook, which is new day's opening range gap, and the range of the last bearish candle in comparison to the current bullish leg. I explained step by step. So over here I measured the close, right? The close is here of last day New York session, all the way down to the open of today's New York session, last day to today. It gave me this range. Okay, it gave me this range. Allow me to change the color to yellow. Don't extend it. Okay, it gave me this range. The price came high to 50%, slightly higher. What I did was I said we had a sell-off, and if this sell-off was a fuel to push the price higher, how long or how far it can go? And do we have any confluence or conjunction in this scenario? So I simply use my measure method that says 70%. So 70% is here. Usually the price tends to fill the entire, if the market is bullish, which is because of the things I explained at the beginning, the passive buyers and so. But I want to see if it's going to have a rest. So this trade is not a reversal trade. It's not a reversal trade. It's a trade that I took betting on the price to rest with down close candles to have more fuels before pushing higher. And usually that happens when this range, allow me to color it, when this range is done with 50% of this range. So the 100% is here, but 50% should be somewhere in this area. No. Allow me. to use another figure. One moment. All right, there we go. So 50% right there. You guys see that? Let me remove this. Let me remove this. So this sell-off, the market rests usually when it gets to 50% of whatever that range is, which is here. All I did was to copy this and extend it higher. See that? I'm just extending it higher. Right there. Same area. 50%. I'm gonna extend it to the right. There it is. And then I waited to have some kind of confirmation. I go to 1 minute chart, and now this is all depends on price action and how far we can read candlesticks. So we have 1, 2 big bearish candle. This bearish candle is closed without a wick or a tail, or the wick and tail, they are very, very small. One bullish candle shows aggressive buyers stepped in. Still, I don't have any setup. But over here, I have this specific candle that it managed to close below this low, and it is an outside candle. The high and the low exceeding the previous candle, not just the previous candle, also a candle before that. So this portion, I'm talking about this candle, that's outside candle, which has take the high and the low of that candle. When a candle like that, that is what I call a manipulation candle, which it takes the liquidity at the highs and at the lows. So I said I have one bullish candle and my stop is above this level. Where is the 50%? OBS is disconnected. Reconnected successfully. Okay, but the price might not get to 50%, so I use the lower portion. That's where my entry is. See that? 435, 442. The lower portion in this wick to enter short position. First trade 1-to-1 to secure my stop. Second partial was 1 to 1.5 according to this.